The end of Q1 officially marking the worst quarter on record for natural gas. And April is not proving to be any better, down another 5% yesterday. But with the weather warming up and producers beginning to cut back on some growth plans, our next guest does see the potential for a near-term rebound in price. Let's bring in Williams CEO Alan Armstrong. The company, as we said, handles a third of all U.S. nat gas. Alan, it's great to have you back. As some people, I got to tell you, looking at these charts for Q1, I mean, somebody said, does this thing ever go up? I imagine you do think it does.
Yeah, well, I think we just have to look back to last summer where we saw gas at the $9 to $10 range to realize how quick this market can shift. And we were about as far out of balance being short in storage last summer as we are right now long natural gas in storage. So it does shift pretty quickly, and we're just seeing the response, I think, in price. One of the key things about this, though, is really the reason we got so short in storage last year was infrastructure and the fact that Mountain Valley Pipeline, which was expected to have been completed several years ago, was delayed once again last year. And so the market had to really twist and start producing out of the Haynesville rather than the Marcellus to keep up with demand, and has done that very effectively, and you're certainly seeing the response of that in the supply in the market today.
I know you've been asked lately about the spread between what nat gas has done and what crude appears to be doing right now. What do you make of that spread, and does that narrow? Does that close?
Yeah, really there's not very many drivers today that keep gas and crude oil linked all that well. We pretty much independently produce most of the gas here in the U.S. is produced as dry gas, and about a third of it is produced along with oil. So the two are no longer very well linked, actually. And gas is considerably lower cost at this price on a BTU basis. It's about 15 times lower cost, and obviously a lot cleaner from a carbon emission standpoint, but the two really don't stay connected very well anymore.
Alan, how much has your outlook as a company, your plans, your financial outlook changed as a result of these persistently lower prices?
Yeah, our business is throughput. So what we really focus on is demand, and demand really comes from things like LNG growth, which is continuing to grow pretty dramatically, and the picture for that continuing to grow. We also, one of the primary drivers is electric generation or power generation, and with an expected warm summer, we might see some response there as well. But if you think about our business, it really is moving natural gas, and so we like moderate prices in a way that keep producers healthy on one side, but keep demand growing on the other. And certainly the U.S. is extremely well positioned to be a major exporter of natural gas. And I think we will continue. And when we see these kind of low gas prices and the amount of growth in supply that we have in the U.S., I think it gives the world confidence that the U.S. can be a major supporter to its allies of LNG export.